Welcome everybody to our webinar today about the PPP loan forgiveness. We're super excited that you're here, and we're excited to share with you new updates and show you our new functionalities here in MoreReporting. So I'm going to tell you a little bit about Johan for those that this is the first time participating in the webinar. Johan has 15 years of experience as an industry leader in the business intelligence space. He's also the co-founder and architect of MoreReporting, the most advanced financial analytics tool for QuickBooks. And his core philosophy is AI-assisted advisory. He believes that AI should augment accountants to become advisors to their clients. Before MoreReporting, Johan was a co-founder of InfoTrust AS, based in Europe, and InfoTrust was a leading sub-business intelligence partner. They won the Partner of the Year award 4 times in the Europe North region. He has 8 years of experience in teaching financial analysis. He has been a keynote speaker in different conferences in the US and abroad. And Johan was developed an advanced calculator for leasing of cars in the bank in Denmark, where the registration fee for new cars was about 150%, and the law entailed about a few thousand pages, and that was updated regularly. So he has quite a bit of experience dealing with situations like what we're dealing right now with the PPP loan forgiveness. So I'm going to give some time now to Johan.
Thank you. Well, thank you for this introduction. I'll start out by sharing my screen here. I hope that you all can see my screen here. First of all, you probably heard that there was some updates to the CARES Act. And you know what? Why don't we start out by looking at some of these updates here? Here we have the original CARES Act. We actually just printed it out in PDF for fun. And it was 348 pages. So this is a quite long document. The top section here is about the PPP loans, and that is obviously somewhat short. I think it's only 30-40 pages long. And if we go to this section 1106, this is where we have all the law that is related to the loan forgiveness. Now, this law is not intended to be 100% complete, so a lot of it was interpreted by the SBA. And the SBA introduced the 75% rule that I'm sure you're aware of, that 75% of the forgivable amount, and this is a very important distinction from what we're going to see in just a second, 75% of the forgivable amount must be used on payroll. Friday, the president signed this Paycheck Protection Program Flexibility Act of 2020 into law, and this is somewhat shorter. It only takes a few minutes to read, and the way that this works is that they simply go and they list, you know, section 1106 of the CARES Act is amended in this subsection by striking the paragraph 3 and inserting this instead. So that's kind of the way that this Flexibility Act was introduced. And one of the things that we've heard a lot about is that the period was extended from 8 till 24 weeks. Some have said that you can choose whether you want to keep with 8 weeks or 24 weeks. I'm not going to say either. I'm reading the law here, and the way that I'm reading it here, it says that the period beginning on the day of origination of the covered loan and ending the earlier of the day that is 24 weeks after such days of origination, or December 31st, 2020. I'm not sure if this gives the flexibility that you can actually choose whether it should be 8 weeks or whether you can choose it to be 24 weeks. And how this is going to be impacting loans that has already been granted. We'll have to wait for further guidance from the SBA to be able to provide this information. Another very important part that they added here is that they changed it So they added this section here. So it moved from an SBA interpretation to becoming law. And here the change is now an eligible recipient shall use at least 60% of the covered loan amount for payroll costs, which means before it had to be 75% of the forgivable amount. Now it has to be at least 60% of the loan amount. So meaning before, if you were using 74% of the amount on payroll, your forgivable amount would simply be reduced. Here, the way it's written now is that if you use 59% of the loan amount on payroll, you won't get forgiveness. So they have definitely loosened up in some ways, but they have also made it more strict in other ways, and that's definitely something to be aware of, because this is some significant changes that has been made. They've also changed it that the payback period has been extended from 2 till 5 years, which I believe is a good thing, because if you are not able to get forgiveness, that would actually be a very significant amount of money you'd have to pay off in 2 years. But now that it's been extended to 5 years, it becomes more doable. And there's other things that are going to go out of this Flexibility Act as well. But again, we'll have to wait on the interpretation from the SBA before we will make any further updates to our calculator. We have updated it so it can go from 75 to 60%, but any other updates will have to wait on what is the guidance from the SBA before we can do it, because it's the SBA that's going to administer this in the end. Good. So if we go over and look at the current document, this is going to be updated, but let's look at this document anyway, because there's a lot of fun going on in this document. I'm sure that many of you have been at least looking through it. It's 11 pages. The first 2 pages are instructions. It starts out very nice. It defines a lot of different issues and items here. Then we get down to the covered period, which says that your covered period starts on the day you get the loan. Then you have the alternative payroll covered period. I'm actually not sure if this will apply in the new interpretation of the law that the SBA is going to make, because it becomes a little bit more strict on the text there. But here it says that if you have a biweekly payroll or more frequent, you can move the start of the period, starting the 8 weeks from the first day of your first pay period following the loan disbursement date. This only applies for biweekly and more frequent. So it means if you are semi-monthly, you cannot use this. You can only use it if you're biweekly and more frequent. But anyway, this is fairly still straightforward. Then they begin to here list what is it that you need to enter in the form itself. They define eligible payroll costs, what they can be, and then we go down to this form. Okay, there's a lot of standard information that needs to be filled out. That's fairly easy. Payroll costs, okay, then they're referring to a PPP Schedule A right here. So let's go and look at what is this Schedule A thing. So this is here. And in this Schedule A, they then begin to refer to a Schedule A worksheet, Table 1 and Table 2. Okay, what is that then? Then they have a new section of the document, including instructions for the Schedule A worksheet. So if we go and just look at this, these 2 tables that we have here, the first one is for employees who were employed in the covered period, alternative payroll covered period, and had an annualized rate of less than $100,000 for all pay periods in 19. The second table is for those who had an annualized rate of more than 100,000. It's still for people who were just employed during these 2 periods in the covered period. But the fun thing is that besides to enter cash compensation, you then have to enter average FTE and also salary hourly wage reduction. And everything is in this document is laid out very straightforward, except these things here: salary hourly wage reduction and also the safe harbor calculations. And there are two of them. If we look at how this salary hourly wage reduction is calculated, then you actually have a fairly complicated line of what you need to do for every employee that is on the payroll during the covered period. And it's laid out in a really weird way. So you have to enter your average annual salary or hourly wage during covered period, alternative covered period. So average annual salary, I guess that's the wage or the salary they would have during the covered period, divided with 8, multiplied with 52. So you annualize it. The hourly wage, well, that is not annualized, and that is a very important detail in this document, the way it's laid up. I saw someone trying to calculate this by hand the other day, and they didn't get this details that this was per hour, and this is annualized. But you basically have two parallel calculations going through this document. And it's then going to split down here if you're going into one end of the calculation, or if you're going into the other side of the calculation here. So if you had someone who were paid, $15 an hour and then had commission on top of that for performance, you would have to sum all of that up. How many hours did they work? How much did they receive in total payroll? Then divide that with each other during the covered period to get the average hourly wage during the period. If they only get hourly wage and they don't get any commission or anything like that, it's just the hourly wage that they have. It would be the $15 in this example. Then you need to do the same thing for the period that is first quarter of 2020. And then you need to divide them with each other. And if the value has been reduced with more than 75%, or reduced with more than 25%, it's kind of put up funny in this way here. Then you go in and continue this calculation. And the first thing you do is you go into the safe harbor calculation. And for the safe harbor calculation, we're now going to introduce two completely different time periods than the one we just had. First one, this thing here. There's another place in the document where it states that you have to use the pay roll that covers February 15th. And I assume that's what you would have to do here. Then you need to go and look into the average annual salary or hourly wage between February 15, 2020 and April 26, 2020. So two completely different time periods than we had up in the top of the document. That means that depending on your payroll system, if you have a very good payroll system, you might be able to get this out of them in just one query. However, if you have a very bad payroll system, like we, for instance, had, and then we changed to Gusto, and Gusto is great, but Gusto still doesn't have all the information for the first part of this year, that means you have to go through and look at all pay stubs being sent out at this point, and then enter the values from that. Meaning you have to go into an Excel or piece of paper or something else and begin to calculate now the fourth period that we're having, and we're not even done. Then if there has been a reduction in these periods, I'm still trying to figure out with myself if it's actually possible to have no reduction here, but you have a reduction up there. Anyway, if then you go and look into, again, a point in time, June 30th, 2020. That date has been extended to December 31st, 2020. So this is a point in time, but they use the word average. So basically, could you keep people on a low salary until the last payroll of 2020, increase it back to the normal levels before crisis, and then reduce it again in January? it's a little bit up to interpretation. I would recommend not to doing that because it's against the spirit of the law that has been written here, and I think that's why they introduced the word average here. But this is just to illustrate that this. Now we're not halfway through this calculation yet, and we're already on our 5th period that we need to keep track of. Then once we have seen that safe harbor doesn't apply, then we will need to go and do the calculation. We'll start by taking the Q1 figures, multiply it by 0.075, then subtract that from the salary that they received during the covered period. And then the calculation splits into two, whether you're having, and remember that all of these figures that you have had here, one would have been wage and the other one would have been salary, depending on what type of employments that they have. Then when you come down to this section here, we first handle the wages. Then we have to calculate the average number of hours worked per week between January in the first quarter of 2020. Now, this average number of hours worked per week, this is a little bit up for debate. How do you calculate that? So let's say you had a guy who worked for only 2 weeks during this period. Do you then divide with 2? Or do you divide with 13? I'm leaning towards the last because it does say the period here, but in the application I'm going to show you in just a minute, we have left that open for you to how you want to interpret it. But it has a significant impact on the calculators and safe harbors and whatnot in how that this is calculated. And it can go both ways in whether it's for the favor or unfavor of the borrower and for the forgiveness amount. Then we will take this amount and that we just calculated before here, which is basically the reduction amount. We'll multiply it by the average number of hours and multiply that by 8, and then is that the forgiveness. Now, this is just, for something that was actually laid out pretty straightforward, they have hidden in here in the comments some pretty advanced calculations. And these calculations, they need to be correct. I've seen probably a dozen different calculators around, and I'm going to show you one of them that is not ours, but that is for someone called NAV. NAV is a company that have received over $100 million in funding. They are loan experts. That's the only thing they do, is that they provide loans. And their calculator here is obviously wrong, and it's very short. And if you compare that with the document we were looking at before for 11 pages, it is obvious that something is missing. So in this example here, just, we enter that they received 100,000, they spent 10,000 on payroll, nothing else, and it calculates that their estimated forgivable amount will be 13,333. And it's not possible to get forgiveness for more than your actual payroll costs. So I'm using this as an example for you. Be careful when you go and pick calculators out there, and make sure that they calculate correctly, because there's a lot of calculators out there who, hey, we just made this stuff here and this is going to help you, and it calculates wrong, and that can have pretty disastrous consequences. The Congress have said that the goal is that everybody gets 100% of all borrowers gets forgiveness. But the thing is, if you base it off a wrong calculator, or you don't send in all the documentation needed, there's a big chance that you won't get the forgiveness, or your clients won't get the forgiveness, and that can have pretty bad consequences for them. So look out for that. In the end here, I just want to show you documentation requirements. These are quite long documentation requirements, and the problem that I'm seeing here is that you can use pay stubs, you can use your quarterly tax reports, you can use bank account statements, for showing how much cash compensation you pay to each of your employees, and you need to keep track of it per employee. You cannot use timesheets. I'm not sure that if you base your values here off of timesheets, that the SBA is going to accept that. And also notice that all of these documents, they have to be kept for 6 years. And our general recommendation is that you do a mock audit when preparing this, to make sure that you have all the documents. That are a lot of documents that you need to send in, but there's even more that you need to keep in case of an audit. We know that everybody who received over $2 million in loan proceeds they have been promised an audit. I guess that's not really a fun promise, but that's nevertheless the promise that has been given. But that doesn't mean that everybody else won't get an audit, at least with the current instructions that we have right now. So make sure that all of these documents, they get prepared and they get filed, so you can find them again in 4 years' time if your client is so unfortunate that they get called out for an audit, because that might happen. Good. Sophia, any questions we should handle at this stage before we go on?
Yes. So we have one. Will this worksheet be effective anymore because of the new 60% rule?
It probably will. It's most guaranteed to be updated because there's changes to it. But I'm also what we're excited about, and I guess that's a weird level of excitement, is how much of it are they actually going to change. My suspicion is that they're going to change as little as possible in it, meaning that they are going to change on page 3 how that they will have to oops, that's page 6. Here we are, page 3. They will have to change this line here, and they'll have to do this validation of this amount way earlier. So that's definitely a line that's going to change because of the way it has been changed. They also will have to update some of the dates in the document. Whether they will use this opportunity to update more, time will tell. We can pray and hope that it will become more simple. I doubt it. That I think, will be pretty much the first time in world history that a government have made something more simple. But we might be lucky this time. I think we have a few other questions.
Yes, for salaried employees, are you differentiating between exempt and non-exempt employees?
Tax exempt, or what type of exemptions are we talking about here?
Penelope, overtime exempt. Okay.
Overtime exempt.
Mm-hmm.
No, for this, both of them are included. The only thing is that, and as I understand it, all of their payroll is included. The only thing is that when you calculate FTEs, or the amount that they have worked over 40 hours, it won't mean that you have 1.2 FTE for that one employee. It can only be one. It's capped at 40 hours a week. Okay.
Got one more question. So how to calculate for hourly employees?
Yeah, let's show you that. Let's show you that. So this is the calculator that we have been implementing here in MoreReporting. Here we have page 3, the summary of that, and here we have then the Schedule A that is there as well on page 6, and the summary of that as well. And we try to keep that on one page so you can get a pretty good overview of what's going on. The next section here is then employees during the covered period. And here we have been entering 6 employees. The first 3 of them are salary, and the remaining 3 of them are on hourly wage. And as I mentioned before, if you are so very lucky that your payroll system can give you the exact numbers you need for the time, that's only going to make your life easier. But if you are, as me, in a situation where you need to be able to enter how much did they work per week, because you need to collect that from pay stubs. The way that we're doing it here is that I would go in and find all of the pay stubs, and here there's in the current interpretation, a very strange mix of cash and accrual. So it basically means that if you have paid any payroll during the 8 weeks period, it is included. But also there is the incurred period. So it meaning that if your last payroll was in the last or second to last week, then you can include hours worked or payroll incurred during those 2 weeks, even though it will first be paid in the payroll following the end of the covered period. Now, with the extension to 24 weeks, this should be somewhat easier for everybody to make sure that they can use all of the money on payroll. And that is, I think, the general recommendation: use all of this on payroll so you don't get into trouble with these rules. But here we would simply, you still need to keep track of it. You still need to be able to document it, not only for any potential audits, but it needs to be included in the documentation you send to the lender for the forgiveness when you get that far. So here I would simply go and say, hey, here in week 2, I paid Alice. She had 60 hours. In paid 4, we paid her for 60 hours again, which is then, both from this week and the previous week, because this is a bi-weekly example. If you were working on a monthly schedule, you obviously would only enter that in the weeks that there was applicable and will be more or less way less frequent. Then all of this is summed up both on the total paid and the number of hours. We would include, then make sure we don't go over the 100K cap. Luckily, they didn't do any changes to that in the Flexibility Act. We would enter any information for healthcare, retirement, and also any state unemployment taxes that can be included as well. We would have the total number of hours, and then we will have how many hours that they work per week. And from this, the system automatically then calculates the average hours and then the advanced and the simple FTE calculation. Now, this is a way that our system is doing an automatic optimization, is that we calculate both the advanced FTE and the simple FTE, and then we look into, in the bottom here, which one is most beneficial for the client. So in this case here, we can see that the simple and the FTE option 1, I'm going to go back to that in just a second what that is the most optimal one. So the system selects that automatically. I believe that it will be a little bit complicated for some to keep track of whether it will be advanced or simple. That will be the most optimal way of calculating the FTE quotient. Good. I saw some questions coming in. Let's answer them before we go on.
Yeah, so is the cover period still the same as prior to the new changes?
It's been extended to 24 weeks as far as I can see, or ending at the 31st of December. How that can be less than 24 weeks, I really don't know, because the last day for applying for this loan is the 30th of June, and there's 26 weeks between those two dates. So I guess it's going to be 24 weeks. Maybe the SBA will interpret and saying that if you have had a loan already, you can choose to go to 8 or 24. We'll need to wait for guidance for the SBA to be able to see if that's actually the case. I know a lot of people out there have been reporting that is the case. I showed you the law before. I'm waiting for the SBA to say whether that will be allowed or not.
Okay, so Pervy pays bi-weekly. Do they still have to break it up on a weekly basis?
I made this option to do, to have all the weeks there, simply just to make it, to make the Excel for you, kind of to speak. The goal with this application is to ensure that you don't have to do an Excel by the side, that everything can be entered in one place and also can be saved and kept in one place. We're going to add that you can add comments different places as well to remember why is thing calculated, not necessarily how it's calculated. That can be easy, but why did we choose not to use all 60 weeks, 60 hours in this bi-weekly period? So as you can see here, I've just entered it every second week because that would follow with the pattern that I actually were using in this example.
Okay. Lariana has a question. How does this table handle separating the owner-employee compensation?
Over here. So We have three. That's a very good question, and I'm glad that you mentioned that, Lariana, or I might have forgotten. So here we check whether they received over 100K in 19 or not in any pay period. You would check that, and if it's owner employees, that gets checked as well. You will check that as well. Now, owner employees, you obviously don't calculate any salary reduction for them, and you don't include them in other. There's some other calculations in the document where you don't include them. Now, we have a document generator here where we can. I'll just take this. Where did it go? We generate this document here filled out with all of the values and all of the tables as well. So here you can see we filled out all of the values that comes from the information that we've set up in the calculator. And we make sure to split. When you check that this is an owner, then that gets put into the correct category here, summary of owner expenses, self-employed and general partners, and goes into the right section there on page 6. So this checkbox here, you can see if I uncheck it, that is what is controlling that.
Okay, for Donna, do contractors or 1099 people paid count towards payroll?
No. Contractors don't. They would have to do their own.
Okay, and is an owner of an S Corp considered an owner or a partner?
Let's look at the definition. I do believe that they would be considered. Where did it go? Total amount paid to owner, employees, self-employed individuals, general partners. That's the definition we have. If they are the owner of an S Corp, I do believe that they would fall under this category, owner employees at least. You would have difficulties arguing that they were not. Then obviously there comes a question, what if they own 0.1%? We'll try to find that out and get back to you on that. Or is there minimum payment? There might have been some guidance on that. I'll have to look it up. I can't remember it at this point.
Perfect. And Purvi had a couple questions on dates, pay period or pay date.
Yeah, that's where things are so beautifully messed up, because that's why you have the mix between pay dates and pay periods. The pay period gets into consideration when you have the incurred. So basically, if you have someone who were paid the day after you received the loan, obviously for a pay period that is way before you received the loan, but because you paid that after you received the loan inside the covered period, it's still included. In the last, in the payroll following the end of your covered period, that part of that paycheck where the pay period is inside the covered period is considered incurred and can be included as well. So it is a beautiful mix of the two. In the beginning, it is pay dates, and in the end, it becomes a pay period that is inside the covered period. But it's only the first payroll after that period that it can be included into. Any other fun questions?
Give me 1 second. Okay, so what if I have a client that staff in-house are semi-monthly, but their staff in field are paid weekly? Will this be allowed as well?
They're what staffing?
The
staffing
staffing
fee?
in the house versus in field. So a group gets paid semi-monthly and the other one weekly.
Well, what would I do in that situation? I would probably interpret and say, hey, I'm weekly, so I can move my pay period if it fits me. But that would be my interpretation of it. Because you are actually paying out money every week. You can argue that, and therefore moving the pay period moving to the alternative pay period, covered period, should be okay. Mm-hmm. That would be my interpretation. But again, that's my interpretation. That's what I would do in that case. But you know, there are cases, and I went through them, where it's not beneficial. But then again, when this has been extended to 24 weeks, it doesn't, you know, it should be possible to cover all of the payroll in whether you move the period or not. Let's see if it's even allowed to move the period after this law change. Any other questions?
So Evie wants to know the cost of the calculator.
The cost of the calculator is $50 per month per client. David, do you want to add anything there?
No, not at this time.
Okay,
That's
thank you.
correct.
Any other questions?
Yes, one more question here. Under an LLC partnership in which the CPA has the, has the owners taking a guarantee payment, would they be an owner in your spreadsheet as well?
Taking guaranteed payments. If they're guaranteed payments, I'm not sure that it would cover as payroll. I'm actually fairly sure it would not be covered as payroll because it's not part of the payroll, it's just a guaranteed payment. But that's just, again, my interpretation. Well, you actually, in that case, they do have some rules that say, yeah, it actually would be covered, but you would have to look at how much were they paid in 19 because their payroll can't go up. There's a specific section that deals with that, and that is the rule there. They would be covered as payroll, but you have to make sure that their payroll didn't increase annualized in the covered period contra what they were paid in total during 19. Good.
Good.
Any other questions?
We have one more, but all the employees will be on your spreadsheet for calculating the FTEs for period.
Yeah. So you will simply go up here in the settings, and then you say how many employees did you have in the covered period. Now, if you had someone who was employed in first quarter of 2020, and then you dismissed them before the covered period, they don't go into the salary reduction calculation, and they should not be included into this table here. However, they will be a part of the FTE calculation, which is the next sections that we have down here. So here we would have to go through to calculate FTE reduction. How many employees did we have between the 15th of February 19 till the end of June that year? So that's the 6th period we have been talking about so far. And then we would have to do the same calculation also for the 2 first months of 20. That's the 7th period, by the way, because it's actually, we did have first quarter, but now it's only the first 2 months of 2020. You would need to enter, again, here are the salary, are the hourly, and I haven't filled it out for this example here. But once you've filled that out, well, actually, I've set all of them to being salary, so they would be full-time employees in this example here. We don't need how much they were paid for the FTE calculation, but we do need to know how many hours they worked or if they worked full-time. And again, here we then go and calculate what is the advanced and what is the simple version of it. So if I take someone here and make them hourly and say, well, this guy here worked 200 hours and this guy worked 10 hours. Let's do it a little bit bigger so we can actually see the number. You can see this guy here gets rounded down in the simple method, and this guy here gets rounded up in the simple and generally there's cases where we want to make sure they get rounded down because that is most beneficial for the calculation, and this is again something that when we calculate the quotients, we get into what is the most beneficial here, and because we calculate all of them, the application itself selects it. I just want to go through this middle section here, which is the salary reduction verification. We already went through this when I went through the document. Here I can go through, and for those who have had a more a change, for where it's less, the amount in the covered period is less than 75% of the amount of the reference period. We would need first to enter the average salary, which is then annualized, and then we will need to enter the hourly rate for the salaried worker here. Remember, the first three in this example were salary, and the remaining three were hourly wage. Then the next section here is this strange period, the 15th of February till the 26th of April. And here, unfortunately, as a section of it, we actually need to include some of the payroll here. So we would need to enter again how many hours did they work, how much did they receive in compensation, and again, you don't need to fill out everything. You just fill out the ones that are applicable for you. If you're paid weekly, you'd obviously fill out every box. If they pay monthly, you'd only fill out about every fourth or every fifth, depending on how many months, how does it fall. And again, here you can then decide how many weeks did they work in a period. And it's kind of strange because the weeks worked is different between the salaried workers and the hourly worker. So that's something to be keeping track of there as well. That will then calculate the average hours, and that then goes into the rest of this calculation that we also went through in the beginning. So I won't go through it again. So our calculator is built to be able to handle all of the data input that you might have in relation to this. For the mortgage payments, rent, actually specifically mortgage interest payments, you can get interest covered for mortgages that the company has, but you cannot get the amortization covered. Likewise, you can get rent and lease covered, and also utility payments, which funny enough include transportation. So I guess it's a little open for interpretation. Again, what is that? It's definitely not the payment of your cars, but it can be fuel, train tickets, I guess, and other stuff. Probably not that many flight tickets because we don't really have any, because flights are grounded anyway. So this actually comes from inside of MoreReporting. So we have a system here where we can search through all our transactions. So I've been in here and selected, I only want to see transactions between the 1st of January and the 30th of April. I can go in and select what accounts I want to see. If I select all the expense accounts, the list is going to be quite long. So that's why I'm in the previous example had only selected the facilities. And with that, I can then select, well, these two are my expenses that should be included into the PPP calculation here. And as you can see, they go over here. And you can also click on the details here, and you can see them again here as well. So this is one of the points where we can do some automatic data entry. It's also possible here to then upload the PDF documents that you can use. Cancel checks, receipts, account statements, and whatnot that can prove that this was an amount that is included, and that can then be included in a standard report package or in a report package that can be printed out and attached to the application for forgiveness that is sent to the lender. So this is a place to keep track of these expenses here as well. And yes, you can obviously just this expense here on the 30th, on the 1st of March would obviously not be covered, but that's the data I had available here. So it's a little free for you to check which ones would go into here. The system is not doing any verification of that. Good. Some more questions are coming in, I see, and comments.
Yes, Lorena has another one. Will there be a table here to help us calculate the other FTE time periods in the safe harbor?
You mean the seasonal one? Because the seasonal one we don't have in yet, but that will be included here as well. Right now, there's these two options for the FTE calculation, and they are included. And again, you can specify in the settings how many employees do you want in each of them. Seasonality is going to be added as well. The seasonal rule, which I believe is between the 15th of May of 19 till the end of September, and in the 12 consecutive weeks there.
Perfect. Good. So Purvi has another question. If the employee did not work for entire covered period or someone got hired in between, do we count them in number of employees worked?
Yes, they will. If anyone who worked during the covered period, you would need to enter this table, which means that if it's going to be forced upon everybody, it's going to be 24 weeks. You know, you need to keep track of all 24 weeks when that gets out on the other end. They definitely increased some flexibility in that, but they also increased some paperwork in that, and that's something to keep track of. And even though they did increase it, it doesn't mean you're going to get a 100% forgiveness automatically, because unless they change the reduction calculations for salary and for FTEs, I recommend that everybody go through and calculate and try to forecast what are we going to do in this period, and will we get a reduction based on salary and FTEs, and are there ways in which we can optimize that? Our training and our Q&A sessions we're having as well, we're going into details on how you can optimize this and how you can use this for advisory. But if you wait until the covered period is over, even the 24 weeks, you might find some unpleasant surprises that they will then be too late for the businesses to address. So even though it has been extended, and it's nice because we don't have to stress out about it, it still needs to be forecasted. Are we going to get 100% forgiveness? Is there anything we can do easily to make sure we don't get 80 but get 100 instead?
Another one, as of March 31st, 2020 means paycheck around the date.
So March 31st is a part of the period that they're using for the salary reduction, and that's part of the period that goes from the 1st of January till the end of that month. And this is something I've had a lot of fun with doing this for ourselves. Is if your pay periods and your paychecks are definitely not going to be aligning with all of the dates that they put into this. Remember, we counted 7 periods so far that you need to keep track of. Yeah, actually, I only think it's only 7. And so what are you going to do when your pay period goes from because you're biweekly, it goes from the 23rd of February till, from the 23rd of March until the 5th of April. What are you going to do with those dates? I don't have the answer for that. There hasn't been any guidance for it. For me, I would when I calculate this salary reduction here, I would simply just enter, what can I document using my paychecks? What can I document? Remember, we are not allowed to use, according to the documentation requirements, we're not allowed to use payrolls, timesheet systems. We're only allowed to use the paychecks and quarterly reports and other things in that regard. So what can you document? And yes, I agree, this is made badly. I wish that Congress had addressed that problem instead as well, because that's actually way more important, and that would reduce the administrative burdens a lot if it was clear what do you do with half pay periods. But I would, in this section down here, for the salary reduction, I would go strictly by paycheck, because that's what I can document.
One more question. What if you have more than one pay cycles in your firm? Some weekly, monthly, 15th, 30th, etc.
Yeah, that was a question we got before. I would simply use the shortest one, because that's the most frequent pay cycle that you have.
And do you import your chart of accounts into MoreReporting in order to select the PPP allowed expenses?
So this is a good question. In here, we have this option down here called auto update non-payroll expenses. If I check this off, I can enter whatever value I want here, and it will go into the document. but when I have it checked, it gets auto imported from the integration that MoreReporting has with QuickBooks. So if you have clients that are working on Xero or something weird system, all of the information that we've seen here can be used in directly. The only thing we then wouldn't be able to do without a data integration is automatically update the non-payroll costs. And you would simply uncheck this and then enter the non-payroll costs here. Maybe at some time we would include some kind of input fields you will have here, so you don't have to do that in the Excel by the side. That probably will be included in the update that comes after the SBA's new guidance, whenever they come with that. Cool.
So MoreReporting can integrate with QuickBooks. Yes.
Yes.
How are the dates that are shown as week 1 determined? Is this a specifically defined term? And for the cover period, will those dates show as week 1 equaling the first 7 days after the receipt of the loan?
Yes, they will be. Actually, we should probably add the dates here, so it will follow. We will make sure to get that added. But in this case here, it will be June 4th till June 10th. That will be the first week, and then June 11th till June 17th, and so forth. If we have a loan payout date, that's June 4th.
Mm-hmm.
Any other questions?
Going back to the chat, that I have a few questions here. Okay, so will you need to complete the figures for all 24 weeks, even if you've met your total expenses for forgiveness in week 12, for example? And if the SBA clarifies that you can choose 8 weeks for 24 weeks, will the calculator be able to set for those 2 options so that we can choose the most beneficial?
Yes, we definitely. To the last question, yes. To the first question, what was that again?
Will you need to complete the figures for all 24 weeks, even if you've met all the expenses by week 12?
Hope so. Hope not. Well, I really hope not. It will be interesting to see what their guidance is, if they're even aware of the administrative burdens that they're going to put on people if they require full documentation for all 24 weeks. But we haven't been given that guidance yet. I'm sitting, and I think a few other 100,000 people in this country are waiting for that guidance from the SBA. Last time it took them a few weeks to interpret it, or maybe a little bit more. So maybe in a few weeks we'll have the interpretation for that. I'll simply will have to point to them and say, we'll have to wait and see what they say. I hope that you can only do it for the 12 weeks and not for the full 24 weeks, because that will just be an undue administrative burden. But I wouldn't be surprised if they choose that. I'll be sad, but I wouldn't be surprised, because that sometimes that's what they do. Good.
And how and where can we access the calculator?
Good. So this is accessed inside of MoreReporting. Sophia, maybe you should pull up the question here, the questionnaire that we have here. If you want, we can, if you want to use it for your clients, or you want to try it out first. So if you check one of the first 2 options there, we can go ahead and create you in MoreReporting right away, send you an invitation link if you're not created already. And with that, you can access this calculator. You can access this calculator there. In a trial mode, there's some limitations that's going to come, but we made it so you can use it there inside of our application. Now, I tried to implement this in Excel. I wasn't very successful, so I went to and began implementing it in code, and that was actually easier. So there's not going to be an Excel version of this, because that was a nightmare for me to try to do that. And I'm pretty good at Excel to cover all rules. Obviously, if you have some exceptions, you can probably make that easier for you. But trying to cover all rules that they have made here in one Excel was not something I wanted to do, and that's why we have implemented it in directly in a web page instead. So we want to help you. We want to do whatever we can to help you succeed with this. We understand that this is a terribly complicated process, and there's a lot of documentation requirements. We heard from someone the other day that they expect that their documentation, there was a bigger company as well, but they expected it to be over 300 pages that they would need to send in with the forgiveness application for paychecks and bank statements and receipts and whatnot. And we want to help you out as much as we can. If you want to try out MoreReporting, click the second option. If you want to use it, if it knows something that you already want to use, just check the first one. If you need a little bit more help and have some few questions that you want to answer, or maybe some more information you'd like to see, click the third option, and we'll have someone from sales contact you. Good. Think you can close this poll now. Any additional questions that we have here before we end? We have a few minutes left.
I think we're good.
Good. Well, thank you for your time, and thank you for coming and seeing our application here. We're excited to work with you, and we will do whatever we can to help you, and hope that you have a great rest of your day, and talk to you later. Thank you.